Hello and welcome to today's Swing Trades with the Day Tradester. Today is kind of a neutral day. We've got the S&P 500 moving up. We opened up at a high, gapped up just a little bit from yesterday's close, and we've got a green candle now that's in an upward trend. So their bulls are pushing this candle up, and that's a good thing, especially if we can get the fast-moving average back above the slow-moving average. That'll bring in a few more bulls to keep pushing this candle higher and possibly even the candles for the rest of the week. But since you're here to see some swing trades, the first one we're going to look at is SVM, Silver Metals Corporation. SVM has had a nice run since August 27th. And let's go ahead and zoom in here. You can see that we've gapped way down, a nice huge big gap there. Might even be the biggest gap of either direction for this entire 3-month run, and it clearly is the biggest gap by a lot, by a large wide margin. I remember early in my trading journey, especially when I started swing trading, I might be in a trade for, in this particular case, we're looking at well over a month in a trade. And then we have a huge gap down, which took us all the way back to basically the September 30th. And I would get a little upset at that, but then I quickly realized this happens pretty frequently. And as long as I'm able to sell at a profit, I'm happy. Or at least I'm happier if I'm able to actually sell any of the shares at a profit rather than holding on to them, which I do if I'm unable to sell at a profit. So let's get back to the swing trading strategy. So what happened is 2 days ago, on Friday, we had price move down below the fast moving average and closed. However, on Monday, we did not have a continuation of this cross. We had price change direction and start moving back up, gave us a nice green candle, except for today we had a huge gap down. There was a lot of dark pool activity yesterday afternoon at the close on both gold and silver and several other metals. So this is probably just people taking profits. I mean, this was a huge run that silver has actually had this year. So it makes sense that some people would take profits. Now we're probably going to be able to take some profits by selling some shares at a less profit than if it hadn't gapped down so much. But at any rate, we'll still be selling at a profit. So I am currently maxed out with 148 shares, and that's 37 shares per book. So I have all 4 books. Now for this particular cross, on the Friday's cross, we did not have continuation. We do have continuation now. We do not do anything with the cross past the slow moving average until tomorrow. We will confirm to see if we have continuation. And if so, we'll sell another book. So we're looking to sell 1 book because of this cross. And 1 book is 37 shares, so type 37 in our active trader. We are now looking hopefully to sell at $6.34, see if that goes. And I was in the wrong column. And that happens more often than I would like, so now I've got to go back. So now I'm looking to sell 37 shares. I just bought those at $6.34. We're going to try to sell these at $6.34. But we're going to sell another 37 at $6.33. And we sold the shares at $6.33. So the book that I just sold, I bought at $4.64. So that gives me $1.70 a share profit. So I'm going to round that up to $2, but instead of 37 shares, I'm going to round that down to 35, and that gives roughly $70 in profit on that sale. The next one I'm going to look at is copper, another metal. This one earlier today had dropped, but not to the same degree that gold and silver had. Let's see if it's still in a red candle situation. Yep, there we are. So looking at copper, we are in a downtrend. We gapped down. However, yesterday's candle was a green candle and above the fast-moving average, although we had 1, 2, 3, 4 prior candles that were down below the fast-moving average, with this candle being the triggering candle and this candle at some point, possibly providing a continuation from that candle. However, if we go back to this candle on October 10th, we're looking at a much larger drop in the price action. So sometimes I would choose to wait until price is lower than the close of this candle. However, with a lot of dark pool activity yesterday afternoon with people taking profits, it's likely that this will continue to go down based on that information alone. There wasn't any specific negative information about the United States copper index or the copper mining, quite the opposite. Donald Trump is trying to secure mineral rights. He's trying to have more mines open up. He's trying to get more mining for rare earth minerals to occur here in the US instead of having to purchase them from China. He's looking for other sources. He's trying to secure contracts with other countries. So right now I'm looking at a 50-50. Tomorrow we might get a green candle. Tomorrow we might get a red candle. And that's that would be strictly the bulls battling the bears. It would be strictly people who are trying to possibly take profits. Will that continue to push other people to take profits? Will that start to collect momentum and start to move down at a faster pace tomorrow? So in this particular case, with that information, I am not going to wait until price drops below the price of this candle close. I currently have 20 shares and I'm maxed out with 5 shares for each book. So I'm looking to sell 5 shares and I'm going to make sure I'm in the sell column at 30.58. And the shares that I just sold at 30.58, I bought at $28.52. So we'll just round both of those down to 50 cents. So that's $2. So that's a $10 profit. Moving on to Taiwan Semiconductor, TSM. So we have a continuation down, not from yesterday's cross, but the cross from Friday. We currently have price lower than the close of the candle on Friday, so we're hopefully going to be selling something at a profit. I currently maxed out with 8 shares. That's 2 shares per book, and the current price is $2.95 and I will be able to sell 2 shares at a profit. We're looking to sell 1 book because we have the price that crossed and closed below the fast moving average, which is 1 trigger to sell 1 book. So we're looking to sell 2 shares at the current price. Again, I want to be in the sell column. Again, I do make that mistake sometimes. I've got a lot going on. That did not go, so we'll drop down to $2.95. So from the sale of $295 for a stock that I bought, or a book that I bought at $243.65, we'll just round that down to $244. So that's $51 a share, so $102 in realized gains on this particular sale. All right, Interactive Brokers, IBKR. Oh, that did not go. IBKR. Interactive Brokers, we clearly have price going in a downtrend. Not only do we have price below both the fast and the slow, we now have the fast moving average yesterday crossed below the slow moving average, and we have a continuation of that move. IBKR, it might be in a downtrend for the next several days or weeks. It's hard to tell, but whenever I have the cross of the fast moving average below the slow moving average and we have a confirmation price, I look to sell everything I have if I'm able to at a profit. If not, I will create sell orders for the shares that I'm unable to sell at a profit. Now, my original purchase of 16 shares back here on this cross, when price crossed above the slow moving average, I did not have enough money to purchase any shares, but the day that I did, which was 1, 2, 3, 4 after the confirming candle of the cross of the fast moving average above the slow moving average, I bought 16 shares to max out my position for Interactive Brokers, and I bought them for $64.97. Now, all of these, these are my day trading, part of my day trading strategy. If you're new to my videos are strictly for swing trading, showing you how I swing trade. So if you are new to trading or you're thinking about getting into trading, I'm just trying to show you a very simple strategy that can possibly make you as profitable as I am on the swing trading side. But these are all day trades. And when I day trade, I only trade one book. So I've only been, all of these, they're all multiples of 4 or they're 4. Except for this one, I made a mistake somewhere, and instead of it being a multiple of 4, we're at 13. At any rate, I still have 12 shares, which is 3 books. I currently have 1 book sitting here in a sell order. And this is from my day trading strategy. Price moved faster than I was able to sell at a profit. So this will sit here until price moves back up, however long that may be. So I now have 8 shares that I can sell at a profit. So we're going to go pump in 10, drop it down to 8. And we're looking to sell at $66.09. Well, $66.08. Drop it down to $66.07. And it went for $66.08. And like I said, I bought them at 64. We're going to round this up to 65. So that's $3. Excuse me, that's $1. We just sold at 66 and we bought at 65. So that's $16 in realized gains on that sale. Now, if you were watching my videos back when I bought Interactive Brokers, or back when we had this cross and you had I had gained some of your trust and you decided to copy my trades, and you rode this all the way up through now and you decided to sell at this point, let us know in the comments. I'd love to hear if you've watched my videos, if you've taken time to even copy one of the trades just to see if I'm trustworthy or whether the strategy actually works. And if you did make some money on this particular trade, again, let us know in the comments. Now that is all of the stocks that I have for today on that I would be able to actually sell from the sell triggers that we received, or sell alerts that we received. I do have a few more to take a look at to either put a sell order on because price has dropped past our purchase price, or that price has moved back up and price of the fast moving average has crossed the slow moving average. So I would be possibly removing some sell orders. So let's take a look. I'm going to take a look at NRG. And I believe I will be placing sell orders on NRG because current price is 162.81 and I bought NRG at 172 and 175. I currently have 12 shares. I am maxed out with my books, and that's 3 shares per book. I currently have 1 sell order for 3. We had price yesterday cross below and close below the fast moving average, which is a trigger. And this morning we received an alert and we have continuation of that move. So we're going to put a sell order for 3 shares. So I'm looking for NRG and my watch list. Looking to sell 3. And I purchased NRG, the least expensive. Closest price is 172.19. So I go to the first digit, which is 100. 10% of that is 10 cents. And I will add 10 cents to the 172.19, making it 172.29. 172.29. Good till cancel extended hours, confirm and send. So there is the sell order for the cross yesterday beyond the fast moving average with its close, and the continuation candle. Another one I want to take a look at that we'll probably be putting a sell order on is Visa. Now this is on the list from yesterday. Oh, well, we will not be putting a sell order on Visa because prices go in the opposite direction. So now we'll take a look on Twilio, and I can cross Visa off my list. So TWLO, cross Visa off, so I don't need to look at that one. So Twilio. Okay, I might have moved a little bit too fast on Visa. So I might have the same situation that I have going on here, and that I'm looking at it more closely. So what happens when I have price move and close back above the fast moving average? We were down below the fast moving average for 1, 2, 3, 4, roughly 5 out of the 6 last days. Not only do I have the close, but I have a continuation candle. And when I have price confirmed to be above the fast moving average, I only want 1 sell order. So I'm going to deactivate the highest price sell order. And when this price is eventually taken out, whether that's today, tomorrow, next week, this will then become a stock that I start to day trade. And I'll put that onto my daily strategy day trading charts. for me to watch as price moves. So I'm going to go back to V because I did not examine that closely enough, and it might be just like Twilio. And it is not. And the reason it's not because the fast moving average is lower than the slow moving average. Even though we have yesterday's price crossed above both the slow and the fast moving average, and we have a continuation of the movement. However, we do not have the fast moving average above the slow moving average. So these stay on until we have a confirmed candle with the price action above the slow moving average. So we will not be doing anything with Visa than we've already done. The last one I'm going to take a look at is Vistra, VST. And here we clearly are in a downtrend for Vistra, at least for the short term, and we do not have any shares that we're able to sell at a profit. So we're going to be placing a sell order. I'm currently maxed out at 4 shares. That's 1 share per book. I currently have 2 already sitting in sell orders. This cross happened yesterday afternoon, so this does not count as a cross. This is not a continuation for yesterday's afternoon cross. This gets moved over to today. So the fast moving average is actively crossing the slow moving average today. So I already have 1 sell order from the price moving below the fast moving average, and I already have a sell order for price moving below the slow moving average with a continuation candle. So tomorrow, when we look at this, if I have price continuing down and below the close of this candle, that will be a confirmed price momentum in the downward direction, and we'll go ahead and place a sell order on the remaining 2 shares. Now there are 2 stocks that I must also take a look at because they're going to earnings this afternoon. The first one is EQT Corporation, and I currently have 4 shares. And when I maxed out, I have 16 shares. So right now I have only 1 book. And when I have any stock going to earnings, and if I have 1 book, all I do is just cancel that sell order. So in case price moves the direction that we want it to go, because we're long, I hold long, I'm a long investor. And I don't want to miss the opportunity of losing any profits. So I don't want that price in its big move possibly this afternoon to take that sell order out, and then I miss whatever gains that this keeps moving in that direction. And the last stock, or the second one I want to take a look at that we have going to earnings this afternoon, is Netflix. So I currently have 2 shares of Netflix, and on my earnings, if you're watching my videos for the first time, whenever I have earnings, I like to sell half of my shares if I'm able to sell at a profit prior to going into earnings. I want to keep at least half of what I own. Now I currently have a sell order on one of the shares, so I'll just leave that sell order on in case there's a spike this afternoon. It can wipe that out and I'll earn a small profit on this sitting here. I would like to just cancel this altogether because I believe Netflix has had a great quarter with K-Pop Demon Hunters and their F1 series that they had and a couple other series like Wednesday. I mean, they had a huge viewing quarter from their customers this last quarter. But since I already made a decision to go outside of my strategy with Dell, for those of you who are watching my videos, you can see where my decision to ignore my strategy. Dell moved against me and it's still going down. So I had more shares sitting in Dell than I would. I have twice as many shares in Dell than I would have if I just followed my strategy. So I'm going to follow my strategy just in case Netflix does go the opposite direction and goes down. Now, those are the 2 shares that I have going to earnings this afternoon. I've got 4 going to earnings tomorrow morning. So I want to take a look at those and do the same thing. And the first one is Boston Scientific, which is BSX. I currently have 8 shares. I am maxed out on Boston Scientific. So what I want to do is place sell orders on half of my shares in case price does move. It can either move in the direction that we would want it to go and be positive, and it'll take out our sell orders that we have, or it can just spike up, wipe out, and take out our sell orders before it moves down. That does happen quite a lot. So I currently have a sell order for 2 shares, which is 1 book. I'm going to place another sell order for BSX for the other second book. Again, I want to sell half of my shares. If I'm unable to sell, then I will place a sell order on those. So I'm looking to sell 2. And the shares I'm looking to sell, I bought at $107.59. So we take 10% of the first place digit of the 1, 10 cents, and that becomes $107.69. $107.69. Good till cancel extended hours, confirm and send. Now, if it is likely, it could happen that Boston Scientific has good earnings and price moves up, but it just doesn't move to the point to where it wipes these out. And in that case, tomorrow morning after earnings, if price does move that direction and doesn't take this out, I will remove one of these sell orders. So the next one I want to take a look at is Hilton, HLT. Now with Hilton, I currently have 3 shares, and that's 1 share per book. So when I'm in this situation, when I'm unable to sell half of my shares, because I can't sell 1.5, I round up. I round down, and I only sell 1 of my books. I err on the side of having more books ready on the positive side than not. I already have a sell order here, and this is going to be a sell order. That price is currently sitting at my day trading share at $277.71, which happens to be 20 cents higher than my purchase price of $277.51. So I don't need to do anything. I'll just leave that sell order there. So the third stock I want to take a look at that's going to earnings tomorrow morning is Moody's. Moody's has, they had a heck of a run. Let's expand this out. So you can't see, they had a heck of a run for 2 months prior. So basically from the end of April, or the end of May, the end of May, they were on a nice little run, and then they've been on a downtrend ever since. I currently only have 1 share. So in that situation, I want to at least have 1. I want to be the owner of 1 share in case price goes our direction, our preferred direction. So the last stock I'm going to take a look at is Vertiv, VRT. And I currently have 3 shares. And for Vertiv, I would max out at 12. So it's 3 shares per book. So I currently only have 1 book. So same thing. We're just going to cancel this in case price goes up because they have a good earnings report. So that's everything that I have to do on the sell side. We sold all the shares that we could from our alerts. I've taken off any sell orders that I have, and I've placed sell orders. So everything is done on the sell side. It's now time for me to take a look at some stocks on the buy side. Now I am currently maxed out all of the shares, and that's end of day. It's 4:00 p.m. Eastern Standard Time. As I was saying, I am currently maxed out. I have all of the shares. I'm fully booked on my day trading strategies. So all of the $1,963 is available to spend on stocks that are moving up. First one I'm going to take a look at is GE, General Electric. So there's nothing to look at. We can see we recently had a cross. However, I'm currently maxed out with GE with 4 shares. It's 1 share per book. I did buy a share on this candle cross, this confirming the price beyond the fast moving average. We also had a cross of the fast moving average above the slow moving average. I already had 3 shares that I was holding on to that I bought for over $300. Actually $303. That was my purchase price for those 3 shares. And yesterday we had a gap up which moved beyond our purchase price, and then the share that I bought yesterday filled us out completely. So we'll move on to the next one, which is Box. So with Box, we're in a situation where we had price cross back here on October 7th. However, I did not have the funds to buy into Box. I do now. However, I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 12 other equities to look at. And out of these 12, I might be able to afford some that actually are more volatile, that actually move at a faster clip than Box. Box isn't a bad stock. They're actually a pretty good stock. Expert analysis have a good outlook for Box for the remainder of the year and on into next year. But I have stocks like SoFi, CrowdStrike, Google, and Palo Alto, and Roadblock. So I believe those are some a little bit more higher value stocks than Box. So I'm going to go ahead and I guess I'll just take a look at those first. So I'm going to take a look at SoFi. SoFi had been struggling here for the last 2 weeks or so. So SoFi, you see they started struggling back here around September 29th. So I'm glad that they're now moving back up. I actually, with SoFi, I actually ignored my strategy. I typically do not ignore my strategy, but I did in this particular case because this, I believed, was just investors taking profits. There was no negative news on SoFi at all. And this is especially after the FOMC decision to actually cut rates. And they did cut rates by 25 points. So that was as it was falling, and as we crossed below the slow moving average, I chose not to sell everything. I could have sold one book. I could have sold one book of 18 shares at a profit, but I chose to hold on, which is against my strategy, which is against the rules of my strategy. But fortunately, this worked in my favor, unlike Dell. Now, we crossed yesterday, the fast-moving average crossed yesterday morning above the slow-moving average, and we have confirmation of that move. So I like to be maxed out whenever the fast-moving average is above the slow-moving average and price is above the fast-moving average. I like to be maxed out. And with SoFi, I max out at 72 shares. So I'm looking to buy 36 shares. So we're going to look for SoFi here. Looking to buy 36 shares. Come on, get in there. All right, delete and 36. The current price of SoFi is $27.70. Looks like, oh, but price is moving up. Hopefully we'll get it at $27.70. Good till cancel extended hours, and this is where the extended hours come into play. It did not. Price is moving up on me. I'm looking at my minute chart. This is a daily chart. So it's now moving up to $28. It's now moving up to $28.55. Well, this is moving. That's at $28.37. It's now at $28.70. All right, well, where are we? $28.75. All right, price was down at $27.80 just less than a minute ago. So my rule for my day trading strategy is whenever I buy a stock, when I buy back in and it's lower than any sell order, I cancel that sell order. And my new shares, or at least one book of the new shares that I just purchased, that becomes the stock the book that I use for day trading that particular equity. In this case, it's SoFi. Another stock I want to take a look at that's actually a good stock and it's been on the move here recently is CRISPR. CRISPR Therapeutics, CRSP. So with CRISPR Therapeutics, enter. There we go. So, well, they were on the move the past couple days. They're moving back down. So I'm just going to take a look, move on to CrowdStrike, CRWD. So CrowdStrike, they're on a move. They're on an upward trend after going down for 1, 2, 3, 4, 5 days, basically. We had price reverse direction before the fast-moving average crossed below the slow-moving average, and we now have continuation of yesterday's cross and close above the fast-moving average. Price is currently higher than yesterday's close, so that's a true continuation. When I am maxed out, I have 4 shares. That's 1 share per book for CrowdStrike, so I'm going to buy 1 share of CrowdStrike. I'm looking to buy 1 share. And I'm going to look at my minute chart. The minute chart shows that this is an accurate price. Hopefully it'll go. And there we are, 502.70. So once I have price above the fast moving average, all but one sell order gets canceled. And the shares that I just purchased, that one share that I just purchased becomes my day trading book, part of my day trading strategy to maximize my profits on my long-term investment holdings. All right, so I've got roughly $430 remaining. I've got, I believe Google is already priced too high. I won't be able to max out on Google, but I'm gonna take a look, make sure. So with Google, I'm sitting at 251. I have 4 shares right now, and I max out at 8, so I wouldn't even be able to buy another book. Palo Alto, I believe, is just over $200. So let's look at Palo Alto, PANW. They're at 214, so I would not be able to purchase 2 shares. I currently have 4 shares, and with Palo Alto, I max out at 8, so I can't even purchase 2 shares of Palo Alto, so I can't get 1 book, so we'll move on. IWM is an ETF that here recently has been doing well. They've come up slowly. They're not a fast-moving stock, so it's not really a preferred stock that I'd like to take a look at or purchase. They just happen to be next on the list. So now I'll take a look at Toast. Excuse me, Toast, T-O-S-T. All right, so Toast currently at $38.55, and Toast, it looks like it is on the move. We've got the fast-moving average crossing above the slow-moving average 2 days ago. We had a continuation candle yesterday, however, did not have the money to purchase it. It definitely is a true continuation, at least for today. And Toast, I like to max out at 20 shares. I currently have 5, so I'm looking to purchase 15 shares. So 15 shares at 380 will not, let's see, it might put me a little over. Let's see. So I should have enough. So looking for Toast, I need to go to all of my account positions, and Toast is here. Right click, we're looking to buy. As I said, I'm looking to buy 15 shares, and I'll take a look. Looking to buy 15 shares. Went to 153. Says the current price is $38.74. So we'll see if that's accurate on the minute chart. Exceed. So I'll drop it down to 10. Drop it down. I can't get 15. So we're looking to buy 10 shares at 38. Still sitting, now it's at 38.55. So we'll just keep pumping this down. Confirm and send. Nope. We'll jump it up to 38.60. Now it says it's at 38.63. All right. 38.72. Still says price is at 38.63. We'll try one more time. We'll try at 38.80. There we go. So about 10 shares of Toast at 38.81. All right, so I will cancel this sell order. We have price above the fast-moving average, and the fast-moving average is above the slow-moving average. So the book that I just bought, the 10 shares, one of those books will now become my day trading book for Toast. And that does it for all of my sells and all of my purchases today. So we'll now take a look at EQT and Netflix. I'm going to go to my minute chart first. 1 day, 1 minute. And now let's take a look at Netflix, see how they performed. And let's expand this out. Wow, look at the volatility. So if you're new to trading and you haven't seen what volatility looks like on earnings release, so we went from 1241 all the way down to 1147, so roughly $100 drop in just 1, 2, 3 in just 4 minutes, $100. And now look, it's ran all the way back up to 1240, another $100 gain, and now it's all the way back down to 1179. So I'm glad I did not go against my strategy. I'm glad I did not believe that Netflix was going to have a great earnings. Now, they actually, let me look, they might have actually had a great earnings, but sometimes investors just move the needle the opposite direction because they're taking profits. So over here, I am going to pull up. We're looking for earnings whispers. Come in here, my favorites, and I'm looking at earnings whispers. So Netflix, no, they did not. They had a surprise to the downside. So even though they had K-pop Demon Hunters, the most streamed show, I believe, in the history of Netflix, they did not do very well altogether, although they have good guidance. So Netflix reported at 4 o'clock, and EQT actually reports at 4:30. It's now 4:24, so we have 6 more minutes. So I'll try to capture that video. So we're going to move this back over to my other monitor. There we go. So tomorrow, if price continues down on Netflix, which it most likely will, I'll be placing another sell order and have both shares of Netflix sitting in sell orders. But we'll more than likely take a look, and we'll be doing that tomorrow. All right, so I'll move on over since we want to take a look at EQT. There might even be some price action before earnings. Sometimes that happens with some stocks. There really isn't a great deal of price earnings. You can see that it went from 55.75 down to 55.10, so that's a $65 drop. All right, so it just hit 430 and it's taken off like a horse out of the gate, but sometimes it turns right back around. This could just be an initial tease. So he ran up from 55.70 to 57.31 and back down to 56.50. Where's it going to go from here? Well, hang in here for a little bit, not much longer, just to see what happens to price action. I'm going to refresh my earnings whispers to see if the EQT is refreshed on the earnings whispers page. It is not, so it's moving, but still moving up. So the EQT that I canceled, that price was at $60.09. So it's still lower than our purchase price. And this is why I hold on to stocks. You know, instead of selling at a loss, this is how my strategy as a long-term investor, but just swing trading and day trading my long-term investments. Now, the videos I'm making, if you're new to the video, and it is that this specifically, I'm making videos for teaching you how to swing trade or showing you my swing trading strategy. I found that the safest way to trade is as a long-term investor, buy quality stocks, sort of like Warren Buffett had said. Now, I'm no Warren Buffett. All of my stocks are chosen by the S&P 500. 3/4 of my stocks are in the S&P 500, so they do the selecting for me, they being the consumers. Consumers decide where they're going to buy their products, which in turn decide which companies are going to be creating revenues, which, as long as they're run profitably, they will be in the S&P 500. And the S&P 500 is made up of the 503 largest, best companies in the U.S. All right, so they're still going up. EQT has yet to actually be listed or refreshed on the earnings whispers page. We'll wait just one more minute. So as I said, my strategy is using the S&P 500 for them to do the selecting for me from the select companies that I choose to have in my strategy. And I do that. I'm specifically staying with the majority S&P 500 companies because I'm making my videos. These aren't for me. These are for you. These are for traders who don't have the time to look at charts, and they can possibly take a look at my videos and either buy or sell according to my videos if I've earned their trust or your trust based on quality companies, based on safe price action and selling according to price action, and not buying and selling based on emotion and what some people might say is a great stock. And the companies that I do have that aren't in the S&P 500, they are strong companies that are expected by many experts to be the companies of the future. to be the next companies that some of them may enter the S&P 500, and some of them won't because they're not all US companies, but they're good quality companies nonetheless. Or they already currently are great companies. Taiwan Semiconductor being a prime example. They are a great company, but they are not in the S&P 500. Now, even though Taiwan Semiconductor is building plants and they're going to have plants here in the US, they cannot be in the S&P 500. The only companies that can be listed in the S&P 500 are companies that have headquarters in the US as a primary metric for inclusion within the index. At any rate, I had been holding on to EQT. Let's expand back out to, let's go to the 1 year and 1 day. I'd been holding on to EQT since back in, I probably bought it was at $60. So I bought around here. Now, again, let's expand this out. So yes, I bought EQT at a high point. So if I zoom in here, you can see I had a crossed on this candle, and then there was a continuation candle, and I possibly didn't have the money, or I hadn't had my strategy all ironed out. So I'm continually working on my strategy and tweaking it and making improvements and trying to find ways to improve it constantly. So I didn't buy here. I probably bought I bought at $59.52 is where I bought 12 shares. So I bought somewhere possibly on this candle. And then 2 days later, it turned around on me. And I'd been holding it ever since. And we'll just say from June 20th. So nearly 4 months I've been holding on to it. They're now starting to turn around. They're having a great earnings. It's time to look at our chart of the day, which is General Motors, GM. GM has moved up 14. Let's expand this out. So from 6 o'clock this morning, they jumped all the way up in the first minute to 60.97 from 56.76 roughly. And then from there, they've just had a nice run all the way on up to closing at 66.57. So a nice big $10 move for General Motors. And for them, that's roughly 14.9% move for the day. Again, this is another example of earnings and how fast and how volatile a stock can move once the earnings are released. And if they are good, positive earnings with a good outlook for the year and on into next year. Fortunately, going into earnings, I owned 6 shares. For me, that's 2 books with 3 shares each. And I had purchased those shares at $61. So I'm in the green. Hopefully it'll stay in the green. And at some point in the future, hopefully we will be able to sell at a nice profit. If you currently do not own General Motors, you might want to consider purchasing General Motors. The current tariffs are not really impacting them incredibly negatively. There is some tailwinds for General Motors because of the tariffs, but not as big as others had expected. So Donald Trump is protecting the U.S. car market to some degree from other foreign car manufacturers. But please do your own research. I am not an expert. All right, so we're going to go back to our S&P 500 index through to SPX. Go back to our one day chart. So we're now back. So we ended up with a little bit of a red candle. Zoom in here. It is the end of day. It's now 5:30. So the bulls ended up winning for the day and pushing the price back down to basically around the price of yesterday's close. And the struggle continues tomorrow. So taking a look at all of my actions for the day, I sold Silver Metals Corporation, CPER for copper, Taiwan Semiconductor, and Interactive Brokers. Now I either put sell orders on or I removed sell orders for NRG, Twilio, EQT, BSX, MCO, and VRT, and I ended up buying SoFi, CrowdStrike, and Toast. So if you are not a profitable trader and you have been trading, or you're new to trading and you're not quite sure what to do some research on all of these, especially the stocks that I bought today. I'm not recommending that you buy these at all. I'm just showing you what I do, and I have faith in my system. I have faith in my strategy. I'm profitable. I have been profitable since I've started trading, and I want you to be profitable as well. And the main reason I'm showing you a swing trading strategy is it's not something that if you absolutely are unable to watch my video the day that I make them, you can either buy or sell days later, even weeks later, depending on the strength of the move of the particular equity that you're looking at the time. All right, before I show you my realized earnings for the day and my portfolio performance today, I would love if you could please click that like, share, and subscribe button. Help me get in front of other people who are drastically needing some help or are looking for help or are looking for somebody that they could trust as a trader who's providing safe information, possibly even safe stock tips, or at least relatively safe. Because the companies that I'm trading and I am putting in my videos are companies within the S&P 500, and these aren't fly-by-night pharmaceutical companies that are startups and they're just looking to try to pump and dump stocks and take people's money. They're not unprofitable companies. All the companies that I'm trading, they are mostly profitable. I do have a very small percentage of my portfolio, like Archer and Joby Aviation. They're not technically truly profitable, but I do not have many of those. The overwhelming majority of my companies that I'm have in my trading strategy are safe, big cap companies. So safe being a relative term. But at any rate, if you could please click that like, share, and subscribe button and help me get in front of other people. All right, with that, let's go ahead and take a look at my earnings for the day. So it looks like that I have a realized gain of $107.67. However, that is not true. I have a realized gain of $246 just from my swing trading strategy that you saw in the video earlier today. Now, the reason those realized gains did not show up is because Charles Schwab and their accounting, the way I have it listed, I only have a few selections, and the closest selection that I can find that closely matches how I account for shares that are sold are last in, first out. So Charles Schwab automatically takes the last stock that I purchased and counts that as the shares that I'm selling when I sell a stock. Except for my accounting, I'm not selling the last shares that I purchased. I am selling the most of the expensive stocks that I hold, but are less than the selling price at that point in time. So Charles Schwab is taking stocks that are priced higher than the selling price at the point in which I sold, and counting that against me, and it looks like I have losses. But as you saw in the video, any stocks that I have that are priced higher, I place sell orders. Thus the difference in gain. So right now, we'll call it $107.67 of realized gains for the day with I can't even say that. We'll just stick with $107.67 in realized gains. This account that I opened on August 19th, I'm performing at 8.55% compared to the S&P 500 at 5.27%. Now, the account that I had before, where all of the assets were transferred over into this new account, I was performing at 16.26 compared to the S&P 500 at 10.54. And the combined totals of both of these accounts, my account is 24.81% year to date compared to the S&P 500 at 15.81%, which means I am performing 9% better than the S&P 500. If you made it to the end of the video, thank you very much, and I hope you all who did make it and are listening to me drone on, I hope you have an absolutely amazing, wonderful rest of your day.